Bitcoin can make you rich overnight, and in a couple of days you can lose a significant part of your deposit. That's because the first crypto is very volatile, huge peaks and then equally drastic falls, over and over again. But why is this happening with Bitcoin? And is volatility always a bad thing? Hey, I'm Eleonora, the product owner at Exma Study, and this time we'll take a closer look at the volatile nature of Bitcoin and other cryptos. You'll find out what drives Bitcoin's dramatic price changes and whether it's safe to buy the dip. So, what is volatility? Simply put, it is the rate at which the price of an asset increases or decreases. If an asset is volatile, it means its price can change significantly within a very short period of time. When launched back in 2009, Bitcoin's price was around a fraction of a cent. Around a year later, it began gaining some popularity, reaching a modest 9 cents. Since then, the king crypto grew by thousands of times, sometimes rising or dropping thousands of dollars within a couple of hours. And there are several reasons why BTC and the crypto business in general is such a roller coaster. First and foremost, Bitcoin is volatile because it's relatively new. Yes, it is already used by some of the world's largest companies, like MicroStrategy, but it's far from being mature. Just feel the difference. BTC has been around for just over a decade, while for instance stocks have been traded for more than 200 years. So they stood the test of time and are now more stable with fewer fluctuations. As for crypto, the world is still trying to figure out its role in the global economy. And because of this, investors often change their sentiments towards the first cryptocurrency, which impacts its price. They react to almost every single news event. This includes everything from macroeconomic events like the Fed's rate announcement to statements made by influencers like Elon Musk. Sometimes one single tweet can turn the sentiment from negative to positive and vice versa. If you wonder how sentiment influences the price of a coin, here is a very simple explanation. When investors and traders feel good about Bitcoin and believe it will increase in value, they want to buy more of it. The demand for BTC grows and drives up the price. On the other hand, when people feel negative about Bitcoin and believe it will decrease in value, they start selling it. This reduces demand for Bitcoin, which causes the price to go down. What's more, the crypto market is relatively small. Its capitalization slightly exceeds $1 trillion as of March 2023, while that of the New York Stock Exchange exceeds $35 trillion. A smaller market is always dominated by a few big players. This means that one or two Bitcoin whales can dramatically influence Bitcoin's price by simply selling or buying more coins. A whale is an entity or a wealthy individual holding a large amount of BTC. Media hype is another factor that affects volatility. Cryptocurrency and Bitcoin in particular have always been trending topics in social media. Business people, financial experts, and even celebrities are all sharing their opinion about crypto or even promoting it. And if, for instance, you read that a couple of celebrities you like hit big with BTC, you and a lot of other fans are very likely to buy some too. On the other hand, if someone trusted predicts Bitcoin's fall a few days later, you may sell your coins. Remember that when a certain coin is being hyped a lot, its demand and price will grow. But as soon as it is overbought, it will begin to fall. Don't be fooled by the idea that it will be rising all the time, as the market always corrects itself. Bitcoin's limited supply is another reason why it's volatile. By design, it has a maximum supply of 21 million, which means that there will be never more than 21 million Bitcoins in circulation. This limited supply can create a sense of scarcity, driving up demand and causing the price to rise. However, because the supply is fixed, any increase or decrease in demand can have a significant impact on the price. Another driving force behind Bitcoin's volatility is its decentralized nature, which means that it is not controlled by any central authority or government that can control the supply, demand, or price. Yes, this was primarily decentralization that caught the fancy of investors and made BTC popular, but it does have some drawbacks. For instance, no central bank or government can artificially subdue volatility to stabilize the price of Bitcoin or other digital assets. But despite the fact that Bitcoin and other crypto are decentralized, governments are still attempting to regulate their use. This also impacts Bitcoin's price and volatility. For instance, when China's top regulators announced their ban on crypto trading and mining, the market reacted almost immediately. At that moment, all that bunch of funds that had crypto on their balance sheets started selling it. And not by limit orders, but by market ones. Bitcoin and other cryptos started falling. However, as you already know, the crypto market is very sensitive. Influenced by some positive news, it managed to recover some time later. Now, the US government cracks down on the crypto industry, which affects volatility as the market reacts to each piece of news from the government. Okay, now let's sum up the information that you've just heard. Bitcoin is volatile because first, it's relatively new and immature. Market players react to all news and often change their sentiment towards the first crypto. Second, it's heavily hyped by social media. Third, the crypto market is relatively small compared to other markets, so one huge player can influence Bitcoin's price, causing massive ups and downs. Fourth, it has a limited supply, where big players compete for its ownership. Fifth, it lacks central bank control, so no entity can stabilize its price. And sixth, it is subject to regulation from governments. Now the main question, is volatility always a bad thing? Obviously no. Massive price drops are always scary, but a lot of investors see them as buying opportunities. By buying the dip, you will have better returns in the future. However, you have to be confident that the coin's price will grow. When it comes to BTC, most experts believe that its price will keep growing. The king crypto has already experienced huge ups and downs, so it's time to test it. If you are new to crypto, beware of investing in new coins because you can lose all your money. Plus, don't allocate most of your money to crypto. Start small to go big. That's all for today. Bye!